Thank you for joining us at Visa Spotlight, our regular online innovation series, where we discuss trends unfolding across the payments landscape and showcase the latest in Visa solutions. I'm Vanessa Colella, Global Head of Innovation and Digital Partnerships. In this month's Spotlight, we dive into the transformation of core banking, from aging legacy infrastructure to cloud-native banking, which provides the agility and scalability that modern banking demands. I've invited Lee Sistar, a principal analyst at Forrester, to walk us through the specific trends driving core banking transformation and to get his perspective on what the future holds in this pivotal space. In this segment, we'll talk to Visa's Kathleen Pierce-Gilmore, Senior Vice President, Global Head of Issuing Solutions. And we'll learn why at Visa, we view cloud-native core banking as critical to the success of our clients. We'll also discuss Visa's recent acquisition of Pismo, a cloud-native core banking platform. One of the things we've heard from many of our banking clients is the need to re-architect their core, away from legacy, monolithic technology to a modern, cloud-based, modular banking solution. Pismo helps clients migrate off their existing on-premises cores to innovation-ready, cloud-based cores. I'm delighted to include Ricardo Josua, the founder and CEO of Pismo, in our discussion, so he can highlight some of the specific use cases around client successes. With this in mind, let's kick off our discussion with Lee Sistar from Forrester. Lee is a principal analyst at Forrester Research and has been following trends like cloud technology and cybersecurity for the past decade. Welcome, Lee. You've recently published a report on the future of cloud, where you cover the importance of cloud-native ecosystems and composable architecture. I found your report fascinating. Can you provide us with your perspective on where you see this cloud-native transformation trend today and where you see it heading in the future?
Thank you, Vanessa. Again, I'm a principal analyst at Forrester Research, where I lead our cloud coverage. I come to this position from previous roles in financial services, most recently as Independent Security Officer at the Federal Home Loan Bank of Chicago, the first all-cloud bank in the world. Before that, I was a member of the infrastructure and cybersecurity architecture teams at Discover Financial Services, where I was part of the effort for the initial public cloud adoption. So I come to this topic both as a practitioner and as an analyst, and I'm looking forward to our discussion today. Before I get into the specific cloud challenges facing banks and other financial services companies today, I want to put forward a conceptual framework that we use at Forrester. Now, let's start with a diagram that many people involved with cloud will be familiar with. It's a clear demarcation between infrastructure as a service, platform as a service, and software as a service, or SaaS. Now, that was a good starting point about 10 years ago when public cloud really took off, but it was soon outdated. Within a few years, there was no clear separation between infrastructure and platforms, as cloud providers offered more and more fully managed services for databases and other capabilities. There was still plenty of lift and shift, of course, data center workloads, for example, moving to the cloud, but they tended to land in different ways, with managed database and analytics services increasingly important. Now, core applications tend to be moved over more or less intact, making use primarily of key network, compute, and storage capabilities in the cloud environment. For banks and financial services companies, these core applications were typically centered on key functions such as accounting, customer relationship management, transaction processing, tracking, reporting, risk management, and fraud detection. Today, the Kubernetes-based cloud-native ecosystem is the reference point for modern IT infrastructure, even if most workloads remain in the data center. That's because Kubernetes facilitates the shift towards microservices, application development frameworks, and lightweight containers. Now, that's a big, decisive shift away from the monolithic applications that are so hard to update and which characterize most core banking applications today. By creating a common horizontal infrastructure that can run on any cloud or any data center, even the edge, Kubernetes lays the basis not only for the modernization of core applications, but also innovation to keep core apps aligned with fast-moving customer and partner-facing applications. Now, banks are already moving into cloud in a big way. Certainly banks and other financial services organizations have legacy technologies that still play a vital role, but they're investing in cloud to move to the next generation of cloud technology in order to compete with both traditional financial services firms and the new fintechs and payment platform players. The challenge for banks is really twofold: adapting traditional IT infrastructure to public cloud, and then using that tech to transform their business. That includes core applications as well as more lightweight customer-facing applications. What we see today is financial services straddling multiple generations of technologies, from mainframe to virtual machines to containerized applications in the Kubernetes cloud-native ecosystem. The earliest cloud-native applications were often focused on customer-facing applications, given the dynamism of cloud and social networks. Financial services companies focus there. That makes sense. But now, banks and other financial services firms are looking more and more to overall modernization with cloud-native, and that includes core banking applications. The challenges are not all technical, of course. Every bank must deal with issues on the list. They must meet compliance needs. Banks have dozens of regulatory updates each day, such as anti-money laundering. They have to demonstrate compliance to regulators at least once a year. In terms of security, banks have a lot of customer information, to put it mildly. They must focus on securing that information in a multi-tenant environment. That's new for a lot of banking organizations. Resilience. Large financial services institutions are critical infrastructure. The need for resilience goes to the financial system as a whole. Skills gaps. IT teams are accustomed to the data center operations. They're not necessarily prepared for the transition to cloud. They're going to need support and training to be able to do so. Now, I want to make it clear that financial services organizations are grappling with these issues, and they are moving away from the old lift and shift infrastructure as a service model, and they're moving to a Kubernetes-based cloud-native ecosystem, especially for digitalization efforts that are aimed at improving customer experience, bringing new applications and capabilities to market, and streamlining their internal processes. First, let's take a look at business elasticity and the impact of cloud-native technologies. Now, during the pandemic, much of business and commerce shifted online, making workloads very dynamic. Now, that was obvious with the rise of online video streaming, gaming, hospitality, and other industries. E-commerce and online banking were other major examples of this kind of dynamism and scalability that we saw with cloud-native applications. The cloud-native infrastructure, including containers, Kubernetes, and serverless, has better performance and greater scalability to support these highly dynamic workloads over the internet. Therefore, the scalability on infrastructure and applications will maximize the elasticity of business, including financial services, as the cloud-native infrastructure, including containers, has better performance and greater scalability to support these highly dynamic workloads. This scalability will maximize the elasticity of your business. For core applications, the transition to cloud-native has other challenges. Many of these applications are monoliths. That is, they typically have large numbers of dependencies that function as a tightly integrated whole. They're typically customized over time to meet organizational needs. Consequently, these apps are going to be harder to update, even at a moderate pace, and it makes it almost impossible to keep pace with the type of innovation and speed that takes place based on the decomposition of these functions into microservices. Many financial services organizations that are moving applications to cloud do take advantage of the opportunity to modernize with microservices and build interactions with APIs, but it remains a challenge for most financial organizations to do so. Nevertheless, financial services companies do recognize the benefits of cloud native, and they're moving ahead with modernization, as this chart shows. At Forrester, we expect that core services, not just customer-facing apps, are going to be included in this shift towards microservices. Financial services companies, of course, have to set priorities. Modernization and digitalization efforts provide general benefits, but banks and other financial services organizations will benefit when they can harness their data and processes to those efforts. While there's a case for some workloads remaining in data centers for various reasons, at Forrester, we see the scale and pace of innovation provided by cloud to pull increasing numbers of workloads to cloud. Not only customer-facing applications, but core applications as well, with both traditional providers of core applications offering cloud versions of their applications, as well as other players focused on financial services and technology modernization using cloud-native technologies. The investments in the cloud-native ecosystem today are giving rise to a composable cloud, one in which the underlying Kubernetes ecosystem allows a common layer of abstraction across all infrastructure, drawing upon the increasingly intelligent cloud infrastructure underneath. These technologies are here today. They can be used to transform traditionally inflexible core applications into much more dynamic and innovative elements of the financial services business.
Thanks for sharing these important insights, Lee. What are the business benefits ultimately for adopting a cloud-native core?
Great question. I would say the main benefit there is dynamism. The core applications are typically monolithic. They have a lot of dependencies by definition about how they were constructed. By decomposing those into microservices and making them more dynamic, it right away begins some greater flexibility and ability to scale.
I love the move to flexibility. What do you think some of the biggest impacts will be for the future of customer experience?
I think what it's going to allow various companies to do, including financial services, is to be much more responsive in terms of how customers want to interact with them. This could be on the desktop, but increasingly it's going to be mobile. Increasingly it's going to be tied to AI-infused types of experience. So breaking down those core applications into something more dynamic, I think is going to be very important for the next generation of functionality for these sorts of applications.
Thank you so much, Lee, for sharing your insights into how cloud technology and microservices are evolving the core banking landscape.
Well, thanks very much for having me.
At Visa, we see many of these trends play out with clients as they manage their own core migrations. This experience with clients informs our core banking strategy within our value-added services organization. I'd like to welcome two Visa leaders who are driving this strategy. Kathleen Pierce-Gilmore, our SVP and Global Head of Issuing Solutions, and Ricardo Josua, the CEO and co-founder of Pismo. Kathleen will share with us how Visa views modern core banking capabilities and our perspective on what is driving cloud migration. And Ricardo will give us the inside scoop on why he created Pismo and share a snapshot of some key client successes. Starting with you, Kathleen, how does Visa look at core banking and the migration to the cloud? Can you also tell us what went into deciding to acquire Pismo, and why now?
Yes, and I'll start by building on something Lee discussed, which is that our issuing clients need to be responsive, whether it's to their customers or even to their regulators. As a card network and leading solution provider to issuers, we've seen firsthand the challenges clients face when trying to advance and innovate, but are reliant on a legacy core technology that doesn't lend itself to frequent changes or enable the possibility of real-time data. I'll give you 4 specific burning issues that we see driving financial institutions to consider migrating to a cloud-native core. First, their existing core is becoming an increasing source of operational risk. For financial institutions to evolve and update these cores over time, they've had to create layers upon layers of patchwork development and integrations, creating a spaghetti architecture, which is now perceived by IT leaders as a major liability. 2, the IT talent to work on these legacy systems is drying up. The reality is that the technology talent required to maintain or update COBOL-based systems is retiring, and there isn't any influx of new talent to replace them. Third, delivering an innovative, differentiated customer experience and staying competitive is incredibly difficult. Many clients' product roadmap is constrained by the digital capabilities that are available from their core provider or a pre-integrated technology. This limits the ability to take advantage of new innovations as they become available, making real differentiation of the customer experience a struggle. And finally, deriving insights from siloed, truncated customer data is near impossible. The data available from legacy core systems is difficult to decipher. Typically, each use case or product line creates a redundant customer account, which is then further obfuscated by processing functions that truncate important data elements along the way. Seeing these trends unfold, we felt a sense of urgency to solve these infrastructure challenges for clients by helping them leapfrog to the cloud and pave the way for future enhancement, like the adoption of AI. We were fortunate to acquire Pismo, building upon our existing partnership, which has enabled Visa to expand into core banking with a fully cloud-native, composable platform, along with integrated card issuing services, all hosted on Amazon Web Services. Pismo was built out of the vision and passion that Ricardo and his 3 co-founders, Danny, Julie, and Marcelo, have for advancing the financial ecosystem with modern technology. So let's hear from Ricardo regarding the traction they are experiencing in achieving this vision now as part of Visa. Ricardo, I know that Pismo's only been around for 8 years, but you've had an amazing track record so far with client successes. Could you talk more about how you're helping clients migrate their core to the cloud now at scale?
Thanks, Kathleen, of course. As you know, we provide clients with a highly flexible infrastructure for core banking and payments, including everything related to cards, deposit accounts, lending, and more recently, corporate banking. For many traditional financial institutions, the reality of core banking migrations is a progressive evolution, not a rip and replace solution. Our approach aligns with this reality, dramatically decreasing the lift, timing, and customer impact. This allows our clients to gain the benefits of a cloud-native core with no disruption. We're working with some of the largest financial institutions in the world, like Itaú and Citi, to progressively migrate millions of their accounts without impacting their customers. Citi TTS, for example, is moving their current infrastructure to the cloud, and we're providing them with a nimble, microservice-based ecosystem, allowing for faster delivery of enhancements, easier integration across products, and a consistent experience across different regions. Through a highly scalable platform, Citi will have high-volume, 24/7 processing with real-time data availability. This will enable their customers to make more efficient cash management decisions while taking advantage of Citi's global network. In addition to core migrations, which primarily focus on traditional financial institutions, we've also been working with many digital natives and challenger institutions that are building their architecture from the ground up. We're proud to support them in thinking about architectures in ways that break the conventions. BTG Pactual, one of the largest banks in Latin America, selected Pismo to run its new retail and SMB initiative. They launched a full-stack offering, including core banking, card issuing, and payments. BTG wanted to create a one-stop shop for its customers by providing a unified and fully fledged bank account with credit and debit cards, real-time payments, and loyalty. Once in market, BTG's app was an immediate success, now rated 4.9 on Apple Store, and has won several awards for its innovative features. As for challengers, NG Cash is a startup that scaled up their digital wallet targeting Gen Z through our core banking and card processing platform. They have migrated their entire user base to Pismo. They currently offer prepaid cards, credit cards, real-time payments, and financial insights to their customers. Their app connects to our microservices through standardized APIs and has access to real-time feedback from users through event streaming. NG Cash is on the path to hypergrowth, and we're happy to accelerate that by providing more flexibility, efficient operational controls, and the ability to integrate new partners and providers through our technology.
Thanks, Ricardo. It's exciting to see that no matter the size of the institution, the Pismo platform can make groundbreaking changes to the way they engage with their customers. As CEO and co-founder, you've built this technology from the ground up. Could you talk a little more about some of the guiding principles that drive the development of the platform? Could you also talk about the role that Pismo plays in enabling an AI-driven future?
We built Pismo as an engineering-led company driven by several core principles. To one, create a future-proof through microservices architecture. Two, to provide real-time, event-driven capabilities. And to integrate multiple products and features in the same platform, allowing our clients to offer their customers a unified experience across different modalities and payment instruments. What we're seeing for monolithic core banking systems and the layers of ad hoc connections and integrations they have created is, above all, a lack of clarity. And that is especially problematic when things go wrong or need updating. Understanding and managing this patchwork of code when responding to an incident or to a new market demand is becoming dangerously difficult. When a regulatory change or a new feature is deployed, the entire system needs to be reviewed and tested regressively. Engineering teams are now often tasked with solving a puzzle, trying to fathom why developers created certain coding artifacts some 30 years ago. We built Pismo to turn this model on its head. Our clients can truly future-proof their systems through a clearly documented platform. As Lee mentioned, we use Kubernetes as the underlying technology for our microservices as a container orchestration system. This allows product and engineering teams to build and update these individual containers in an asynchronous way without any impact to the other functions in the architecture. This in turn allows the financial institutions to address technical debt of the past and create a transparent model that greatly reduces their current operational risks and prepare them for the future. The Pismo platform revolutionizes the way banks collect and engage with their customer data. Rather than batch processing, data is available as a real-time stream and is based on event-driven architecture, or EDA, allowing the systems to react to events as they happen. Treasurers, for example, gain radical improvements with EDA. With the onset of more real-time payment systems worldwide, treasurers must constantly forecast balances to avoid potential surges of withdrawals and deposits. With our platform, they have up-to-the-moment data to update their balance sheets versus having to always play catch-up. Also, real-time event streaming and near limitless storage capabilities create an immense data repository for prospective insights. The scale of these new data sets paves the way for an AI future, with a new foundation to train LLMs. Being able to effectively prepare for implementing an AI-based solution will pay huge dividends. Some are already obvious, like fraud detection and risk management, or providing real-time customer personalization, or even accelerating back-office processing.
With all these evolutions that Pismo enables regarding core banking functionalities, can you talk through how this could translate into a new banking experience for consumers?
Customer account details, transaction history, cards, and loan data are all simultaneously and asynchronously shared between different verticals of the business. Financial institutions now have a single universal customer account that can be acted upon based on real-time behavior. With the general ledger being consistent, whether it's their DDA or credit card, financial institutions can deliver the most relevant propositions to their customers exactly when they need it. As an example, after instantly issuing a virtual card, a customer can quickly connect and access an existing credit line. Then, the customer can provision their virtual card to their mobile wallet for instant use. That same customer can set up multiple credit cards for his family or employees and define some usage controls for each one on the fly. The platform makes integrating existing rails, like real-time payments, easy, so that customers can pay down their credit line instantaneously from their checking account and see their credit limit reestablished also in real time. This entire process is done in the same environment without latency and is streamed to the bank in real time, so they can quickly engage the customer with notifications, promotions, alerts, and instant credit extensions.
This really opens the horizons for clients that have been struggling with competitive differentiation as well as customer engagement. I want to thank you, Ricardo, for walking us through Pismo's market traction and platform strategy. I'm looking forward to our team's partnership and collaboration so we can continue to help financial institutions migrate off legacy cores onto our truly modern and transformational platform. Back to you, Vanessa.
Thank you, Kathleen, Ricardo, and Lee Sustar from Forrester for joining our panel on transforming legacy banking infrastructure to modular cloud-native architecture. To our customers and industry experts, thank you for joining us. We hope you gained insights regarding the benefits and challenges of core cloud migration and Visa's acquisition of Pismo. Visit our Spotlight page on visa.com for more information. Join us for future Visa Spotlight events where we'll discuss vital industry topics like security, acceptance, innovative payment methods, and showcase our latest products. We look forward to seeing you next time.